Hi everyone, this is Will. Thank you very much for stopping by. So just feeling a little nostalgia in terms of where I am with Velocity Banking and wanted to go back to January of 2024, just running some numbers, and here I'm using just average numbers and just wanted to run through the board with you to kind of see where my head was at and what was going on with me. So in general, my W-2 salary or income only was about $3,681.85 a month. The expenses on average was about 3,500 8530. And with that left me a cash flow of about $96. Now, to many of you who've been with me for a while, I had at least a cash flow of maybe $390, so that's not too far off. So one of the first things that I did was I identified one of the credit cards that I wanted to pay down, and it became my operating expense account, according to Velocity Banking Advocates. And that was $7,559 on a Wells Fargo card with a credit limit of 7,500. So I was over the limit in the card. So here in doing velocity banking, I had to identify those things that I could charge on a card and those things that I had to pay with a check. So from my salary, the things that I could not put on a card and pay for with a check was my rent, $1,276.50, student loans, $374. I had a car note that was $147 a month. Also utilities to go along with the rent, $323.81. So that came up to $2,121.31 that I had to keep in the bank that I was not using for velocity banking at that particular time. So every month up until June, I was keeping about 21, 31 in the bank. So that left me with about, on average, $1,463.99 to use for velocity banking, to chunk or put it on the entire operating account to hit the average daily balance, hit the interest, and hopefully pay less. So with that in mind, we jump over to the credit card that was a Wells Fargo card at 24.99% interest. Now it's a little bit higher. Okay, so at that particular card, I put the $1,463.99 that I could charge on it, took my income from the 2 weeks and just dumped it onto it. And there you can subtract from the card. So that $1,463.99 subtract from the principal balance, that left me with a balance of $6,095.01 for the first month. Now, remember, I had to still pay for the expenses in general. So the expenses that I placed on the card, as I talked about early, was $1,463.99. So as soon as I could, I got that money and I put it on the card, let it hit the principal and the interest, and then close to the end of the month, I'll start paying the bills. Now, because I put in $1,463.99, that served as a payment, in which the payment was also a part of my original expenses. So I took the payment out, which was about $250. Let me make sure that's correct. So I put $1,463 on the card, And because I placed that on the card, that made the payment of $250. So yeah, $1213.99. This is minus the payment that would have been on the credit card. So as the advocates talk about, when you put your entire check in, or as much as you can, that is actually the payment. So I was able to subtract the payment of $250 from the $1463 and came up with $7309 in general. So that bumps it back up because expenses went in, it increases. My check went in, it came down. Now for the month, we got to have a little bit of interest. So to get some of the interest that I placed on, that was on the card in between the average daily balance, I took the high 7559. I took this low of 695, divided it by 2, multiplied it by the interest rate 24.99, and then divided by the number of days in a year, which is a leap year, 366 days. That gave me a per day cost of $4.50. Sorry, so small, but it gave me a per day cost of $4.58. And I multiplied that by 31 and came up with $141.86 in interest. So I got to add interest back to it, just like I added expenses, and that pushed me back up to an ending balance of $7,400.50.80. Now that's with doing velocity banking, putting your check in, rinsing it out. Now, if I would have just made the payment of $250, 200 would have went toward interest and $60 toward paying the principal. So again, with the velocity banking and all the work that I did, I would end up with a balance for that particular month of $7,450.86. Now, without velocity banking, the balance started off $7,559, and about $200 was the minimum payment. Of the $200 and $50, 200 went toward the 190 went toward the interest, and I left 60 going toward the principal, which would have gave me a balance of $7,499. So in between the velocity banking method and just making my regular payment and them taking the interest and the principal, I saved about $48.14. All right, so a penny earned is a penny saved is a penny earned. Again, and additional to that, now this is just 1 month, and one of the main features of the velocity banking is that when you put your cash flow, in this case, which was $96.55, onto the card and you leave it there, it has a compounding effect. So the higher your cash flow, the higher the compounding effect. So say that you're a couple and both of you are able to do velocity banking, $500 each, that's $1,000 that y'all could have in cash flow every month. Now with the compounding effect of that, that would be $12,000 in 1 year that can go onto any card that you have. Now, barring when I was doing it, some things came up. So although well, like I said earlier, 390 was living on the card month to month to month. Some things came up, like I paid insurance every 6 months, and that was about $300 a month. So that did not help with the compounding. That kind of like took away from it. So that's one of the key things. Your cash flows to help you compound, but then some things can come up that can take away from it in general. So this was just an example. Like I said, I had some time on my hands and I just ran some numbers using averages in general. But as you see on the previous videos, I had about 390 in cash flow, and now I'm up to maybe about 890 in cash flow using the velocity banking method. One of the main things is that whatever I'm doing now and have left over from my paycheck fundamentally sits on a line of credit somewhere. I have maybe $10 or $15 in a checking account so that I can have the checking account open. But for the most part, I have emergency funds, savings, everything is now in my line of credit, which is larger than what I started off with. All right, so if you have any questions, any comment, please hit the like button. Please hit the share button. So everyone would definitely have the opportunity to look at that. And really, we can try to do much more. All right, so if you have any questions, please drop me a line. Have a great day. Bye-bye. Feeling a little nostalgia. That's why I ran through this.